Hello and welcome to this episode on Novelties in the Companies Act 2013. To discuss the various novel provisions in this Act, we have the benefit of the company of two past presidents, Ms. Preeti Malhotra and Mr. Pawan Vijay. Can we kick off this chat with the most important novel provision of the one-person company? Normally one thinks the term company would mean the company of two or more people, but we now have a one-person company. Can you throw some light on this concept?
Yeah, sure. So that's a new provision that has been brought in. If I remember, it was, in fact, it was recommended by the Irani committee. And I think the whole concept of one-person company is that even a single member can form a company. So there can be just one subscriber. And what they've done is provided adequate safeguards. So in case something happens to that one member, he has to nominate another person who, if he dies or if there is a disability, will be the member of the company. So, and of course you have a lot of international benchmarks. In fact, a lot of other countries have this provision. And I think especially in the Indian conditions, it's a very good concept that that's coming in, because you know you have individual workers, you have artisans, you have weavers, you have people in the service sector who are really unregulated and in the unorganized sector. So you know it will help them come into the company structure. It will help them have some kind of governance measures, have access to outside capital. So to that extent,
limited liability.
And limited liability. Right. So it will have all the benefits of a corporate sector, at the same time give them the flexibilities, the relaxations in terms of compliances, like they don't have to hold an AGM, you know, and obviously if there's just one director, so minimum director has to be one. So if there's just one director, probably when he signs the board resolution will be the date of the board meeting. Right. And naturally the quorum and other requirements of having EGMs is not there. So it'll be, the compliance part will be easy for them, and at the same time they'll get the benefits of a corporate structure. And from the regulars' viewpoint, they'll get all the unorganized sector into the organized sector.
So it would be fair to say that a one-man show can now be a one-person company, minimum one director.
Yeah.
But even that one man can say that in the conduct of my business, I'd like to be governed by a body of experts.
Yes.
And therefore have a board of directors to govern a one-person company?
Oh yes, there's no restriction on the number of directors, so they can have more directors than one. So obviously have the benefit of larger participation and diversity of board for better decision making.
Right. So you were part of the Irani committee as well. So was it the thinking to, I mean, in some sense it goes back to the Solomon versus Solomon situation, where one man who's otherwise an individual acting with the rest of society now has the benefit of also acting with a limited liability. So that his business is ring-fenced from him.
That's right. Yeah. Yeah, that's it. And then you have these international benchmarks where it has been successfully tried and tested.
Right.
So one point for one-person company, you have to see Indian culture also. In India, we don't want to involve our women in the process. So suppose one person who has started a business and he has no other friends, and he wants to start a company. So he has to either involve his wife or some other thing. So one-person company in Indian concept will be a hit. And second is, government is also planning that all these unorganized sector like partnership, proprietorship, which is not recording anything anywhere. And in India we have this sector is a very big sector on the economic front of view. So that will come into the channelization process.
But maybe as a practical reality, a bank lending to a one-person company may still want the guarantee of that one person.
We face the problem in LLP also.
Even in a even in a limited liability company.
After some time, it will.
But there's a start in the direction. You spoke about women, and I'll come to the role of women and women directors later in this chat. But from one-person company, shall we move to the concept of a small company? The Act seems to be creating a platform for small companies and a separate dispensation for what is regarded as a small company. Can you throw some light on that?
Like the new act, the definition of section 2, subsection 85, prescribed definition of a small company. And the interesting point is they are not talking about the small company in today's concept. They are saying the capital 50 lakh rupees and turnover is 2 crore, which can go up to 50, and the capital can go 50 to 5 crore rupees. They have already planned in this manner. So now the point is, in India there are 13 lakh companies. 50 or 60% companies are dormant. Why they are dormant? Because compliance level of the top listed company and the small company is same. You have to follow this. So that's why so many people are not complying this, and that's why more and more companies are not filing returns. They are just dormant. So now this new concept which is providing you have to comply less stringent provision, and you have to follow in the category of a small company where you are required to submit with less returns, less compliances. I think that companies, in my opinion, categorization in this manner, more and more compliance will take place.
Right. But what are the areas where there's a relaxation? One is that the scheme of arrangement is
like a small company merger and the winding up process. Suppose small company they goes for winding up, then they find like they are saying you have to submit the cash flow statement that they are restricting, and the meeting process.
Frequency of board meetings.
Yeah, board meeting.
Once in 6 months.
Yeah.
Right.
So
other than once every quarter.
Yeah,
Yes.
right.
So these are the something they are saying, and the fees process also they are proposing to have a lesser, which will come through the rules that way.
Right. Can we move to the reference he made to women? The Act speaks about women directors, and you've been a lady past president of ICSI. What's your perspective on this provision?
First lady, first president in
The
any
first lady
in any institution.
president in any of the professional institutions. Okay.
Yeah, so what the Act has prescribed is that certain classes of companies to have one woman director. I think it's a great beginning for women. I think it's always important to have gender diversity, and women have their own perspective. They can contribute very effectively. They have positive attributes which research has shown. They are more resilient, collaborative, empathetic. So I think they'll bring a lot to the table. And, I think in fact, this provision will give them an opportunity to train themselves to act as board members. And I know, I can tell you, I've been to 1 or 2 conferences, the women corporate directors and others, they're very excited. They're very excited that this provision is coming in. They're preparing themselves, gearing themselves, training themselves so that, they can act as women directors. And there is a data bank for directors which the ministry has prescribed that professional bodies and chambers of commerce can have data bank of directors, and they're preparing their resumes, for being part of this data bank. And I think importantly, there are international benchmarks. In fact, if you see Scandinavian countries have up to 40% women. And to bring about gender parity, there are legislative changes in US, other European countries, Singapore, other countries too, the Gulf countries also. So I think it's a provision which is needed at this point of time. I mean, maybe after 5-6 years it can be done away with, because in India you find the number of women directors are very little. I think it's just about 2 to 3% of the board composition. So I think this provision will give them that initial encouragement which is needed at this point of time.
Right. So you don't think it would be used as a check the box with the wives and daughters of promoters?
See, I don't feel so, because here there are 3 kinds of directors who can come in. Of course, the rules have to prescribe for what paid up capital and for what class of companies, but they can act as executive directors. So, people from within the organization can promote themselves and come in as executive directors. They can come in as non-executive directors. They can come in as independent directors, because in any case, again, certain class of companies will require independent directors. And I think it finally depends on the will of the promoter. See, if the promoter wants, they can have good independent directors. They can have good women directors on boards. And if they don't want, it's not a question of woman or man. I mean, obviously the quality of independent directors, if they just want friends to be independent directors or their wives or relatives, then one can't really help that. But I think today promoters are also realizing that if they want access to outside capital, then they have to have good governance measures, have a diversity on their board, and I think they're realizing that. And investors too are becoming very proactive. So you find, especially now with the e-governance regime coming in, you'll find investors far more proactive, and they also obviously want to invest in companies which follow good governance practices.
Right. So it's a very important social nudge.
That's right.
Through the Companies Act.
That's true. To bring in gender parity.
Another point is also women directors. Somebody was asking why women. So I was addressing on seminar, and I told, if you see the women and men, the decision making process, the woman is very fast.
Right.
And somebody asks how. So I told, in case you are managing your home and some guest is coming, you will be confused what you have to make. But you see that ladies, they do quickly what they have to prepare, what they have to do. So the decision making process of ladies is
multitasking
faster. And second is the consumerism also will affect in this process.
It will definitely lead to more effective board performance, and I think with especially now with the concept of the nomination committee coming in, it will become the responsibility of the nomination committee to ensure that especially for listed companies and other companies where public interest is involved, to ensure that they have good directors you know, who are appointed on boards.
Preeti made a reference to e-governance, so let me bring you in on that. Can you talk a bit about what does this act do in terms of e-governance and making governance more practical and easy rather than being stuck with old requirements of physically meeting and being around, having to converge physically in a place? Can you throw some light on provisions?
There are 3-4 things this act is talking. One is that previously there was no recognition of maintaining of records in the e-form that they are allowing. Then the communication system, earlier it was physical letters, now it is email is also allowed, and say viable concept they are talking. The most important thing is the video conferencing, board meeting through video conferencing. Now what is happening in India, that there are so many clients of ours, they are foreign companies and they have to come to India, their directors are there, they have to come to India just to attend one meeting of because every time they have to come because the physical meeting is allowed. Now by this process the video conferencing will bring 3-4 things which in my opinion, one is the quality people will join, because today if I am saying, so you come to my company as a board, you are saying I don't have time, I can't come to Delhi again.
It will attract global talent.
So you can attract global talent, that's right. And next is the participation in the board meeting, which is a formality, will be more, because I'm not attending meeting because I have to go to out of Delhi, out of other places. So that will be a good talent process will start, and more contribution of the board people will be there. And after some time when we are seeing the 4G is coming and other things, so on your mobile you can do, and you can set up the entire system at your place also, or the internet TV is coming, so you can sit on your system.
So we can't yet do general meetings electronically, right?
No,
not yet.
There's a board meeting, but I think after some time.
But they can participate, so you have to provide the video. Now in the new law, there's a provision to provide the video conferencing facility. So it's not that, you know, normally what used to happen in AGMs is that if you were, they used to have it at way of places companies. So now what will happen is that if I want to participate sitting in Delhi, but say the AGM is in a place in South India, I can do so by video conferencing. So that facility I think has to be provided.
So that is not restricted. That is like Infosys is doing. They are when they are having their meeting,
the whole thing.
They are asking anybody can participate. But after this, there will be possibility that big companies, they will start that we have a particular center. You can go there, and you can participate from your home also by doing this.
Right.
And even the postal ballot process. Now, for example, you can send e-votes. So, you know, obviously, again, it's easier to e-vote rather than send a postal ballot. So
e-voting is they are making now the part and parcel of the system. Yes.
Yeah.
You know, it's important, I think, for mutual fund, foreign institutional investors to participate. So this is one way they can do that.
Increase the quality of participation.
Yeah, that's right.
Because in India, the if you see 1 lakh shareholder and participation is 20, 30, 40.
Right.
So by this process, though it requires more efforts, more process, but I'm hopeful that after some time the participation will be thousands,
right,
and it will be easy, and then after some time they can start mobile voting also,
right.
So the voting can take place, so the process is going on.
Right, so at least it's moving in a should we talk about the key managerial personnel as a concept now that there's a provision for it? What's the attempt there? What's your perspective on key managerial personnel is now provided for? Can we have your perspective on what the provision does?
So certain classes of companies, again, as may be prescribed, have to have a KMP, and what they've defined in the Companies Act is either a managing director, manager, whole-time director, or a company secretary, CFO, or any other person who may be prescribed will act as the KMP of the company. And the section clearly says that there have to be 3 KMPs in the company. The first one being either a CEO or a managing director or a manager, or if there's no manager, managing director, CEO, then a whole-time director. The company secretary and the CFO will be the key managerial person of the company. Now, it's not that these people were already there, but I think they've been recognized by law as the KMP now, which is the important part. So they have to be properly appointed by the board. For example, the CSCFO, the duties have been defined. Because I think importantly we have to understand that these people are the ones who are into day-to-day affairs of the management. They are the ones who have to effectively perform, ensure that the board decisions are implemented. And then they are also named as officer in default. So if there is a default, obviously they are the KMP who will be held responsible. And I think, and that's why what they have done is that they have also mentioned that as part of the officer in default, they mentioned that the independent directors or non-executive directors will have a little limited liability to the extent that they'll have to pass through the knowledge test. That is, if they have knowledge of a wrongdoing or irregularity, and if they don't take corrective action, or if they're not diligent, then they're held responsible. Because obviously it's executive management who has to be responsible for day-to-day affairs of the management. So
the general officer in default, which would all fall on the entire board unless someone's designated, do you think now gets expanded a bit with the designated KMPs at least?
Yeah, see, that's right. So since KMPs and also directors are part of the provision of officer in default, but as I mentioned to you, non-executive directors will only be responsible if they have knowledge, and if they have not acted diligently. So that's important. They shouldn't have committed an act of omission, or if they've not acted diligently, or if they've not, obviously gone through their board papers. Now, for example, if something is part of the agenda or the minutes, and they don't take action, they will be held liable. So
and in that situation, if the board is in default in appointing KMP anyway,
yes,
then they are in deep trouble.
Absolutely. And then a whole time, again, these will be whole time KMP. So they have to have, but of course there's a provision that says that a KMP can be a KMP in the holding company and also the subsidiary company.
No, one important point which is related to KMP. Today what is happening, we are putting more responsibility on company secretary and CFO. But we were not protecting them for their removal. Now what is happening, suppose MD is not liking a person or something is happening, so he can tell the company secretary, boss, don't come from tomorrow. But now it will not happen. Any appointment of KMP, and if you are removing, it has to remove through the board. So it cannot be that you can remove any person by the executive.
So institutionalizing those offices.
That's right.
And the impact will be, if the institutionalization is taking place, then they can govern better. They can raise their point. They can work. They are not working in a somebody's clutches that
fiefdom.
Yeah, say for example, the company secretary is responsible for governance, for compliances, CFO for finance matters, CEO for operational matters. Now what happens is, in the past you used to see one or two of them maybe reporting to the CEO. So they're not really able to voice their concerns in a board meeting. So now, since they're being appointed through the board and their resignation is through the board, hopefully there'll be better governance.
I was seeing Mahabharat. Vidur to agar ye process, if this process is going on, वो तो बहुत बार बाहर निकाल देते हैं उसको.
And the flip side of this is, now that the office of the CS is institutionalized, if he still chooses to just toe the line and not conduct himself as an holder of an institutionalized office, then his professional standing is in danger.
Yeah, because they've also, what they've done is very clearly defined the duties, responsibilities of the company secretary. So obviously they have now, for example, compliance of all the laws is again become the responsibility of the
And this was a demand of the professional also, that you are putting so many responsibility, but you are not protecting. And there was a demand that it should be appointment through the
and for small companies, of course, they can have access to outside professionals and practice.
Let's move on to the much discussed subject about this law, the CSR provision. I mean, I think it's been debated and discussed far more than other provisions. So can you share your perspectives on what is this provision, what is this novelty that's been brought into the Act?
As per section 135 of a new Act, it talks about the CSR. Now, no doubt the industry, whenever minister was going and any officer is going, that was the first question on CSR. And everybody was surprised that why the CSR is compulsory, it should be mandatory. But in my opinion, because I am supporting this point, and what I'm saying, in Indian concept, we have seen since our childhood there was a Dharmada account in all business, and Dharmada account was nothing, it was a CSR. But in the past, what has happened, the process has improved and people have started giving charity. So there are two processes started in this. One is those who are really doing charity, and those who have started charity in the name of charity and siphoning the fund. But now what is happening, that they are prescribing that all companies, those who are having a 5 crore rupees profit, 500 crore rupees net worth and 1000 crore rupees turnover, any this is not all three, this is in any year it is eligible for CSR. So the point is, if you are doing some business, you have some factory in some remote area, and you are taking out so many things, you are creating a problem for that local things. Why can't you do something for the society? So it is a time that we talk about the returning to the society, but we are not doing this. And this is not our role, that we should just focus on our own business. We should focus on the society also. So this is one step, that we are responsible citizen and we have to work for the society development. Now in the law they have prescribed various process, and the rules will suggest in which area you can do. But the focus is that you have to spend some money on the local area where you are operating. You have to spend money on the not on the CSR activity of, if you have some company outside India and you are spending something there, so it is in India you have to spend. So by this process, I think CSR, we calculated the list of the companies, listed companies, and we calculated their profit. It was coming 9,000 crore rupees as the total 2% contribution.
2% of that is 9,000 crore as a kitty?
As a kitty,
right,
will come. All the government companies like PSUs, they are already doing, and they are doing as per their rule, they are spending 5%, okay, as per their internal guideline. But in India, the prescription is for 2%. I think this will be a good beginning. And
this is again a nudge. It's not a mandatory provision.
It's not a mandatory provision, but you have to give why you have not responded if you have a money and you have a committee. The most
can the board say we pay our taxes and that's adequate and we don't think we need to do CSR?
Yeah, you can do, but I think after some time, the most important thing was entrepreneur development. That is one part. In my opinion, that companies can start to develop the skill of the people, and by promoting like P fund, like a skill development fund. So that is one area. If it is channelized properly, we can.
I think the budget spoke about incubators in IITs.
Yes.
Qualifying for CSR.
Yes. Yes.
So it's a step forward. It's just it's a non-mandatory nudge in the right direction.
Yeah, but also I think the CSR committee has been mandated to form the CSR policy of the company. So it again becomes a responsibility of the CSR committee, which again has to have at least one independent director. And then they have to report the policy in the board. So obviously the reporting is mandatory. So I think even from the public perspective, if they want good investors to invest, it's important for them to give reasonable reasons for if they have not invested.
Sure.
And I think here it will be important to see that operational expenses don't get classified as CSR activity. And
so there will be classification issues, there will be interpretation issues, but directionally...
to start with, but because what you hear the minister saying in various newspapers is that obviously they'll be a little lenient to start with, to encourage companies to invest in CSR activities.
Can we move to...
And just one part of it is that, I think it's important because what they've said is that you can even donate to NGOs. So for big groups, who have their own foundations, they can donate to those NGOs. So what will be important is to see the credibility of those NGOs and have some kind of a credit rating system maybe.
So from enabling provisions, shall we move to another novelty in a prohibitory space? This whole intervention into the number of degrees of subsidiaries. What's the law there and what does the Act do?
So I think what they've provided is that they've said that the law has, they've given a definition of subsidiary company, and in the definition they have said that such classes of holding companies as may be prescribed shall not have layers of subsidiaries beyond such numbers as may be prescribed. And then there's a section 186 which goes down to say that the company shall, unless otherwise prescribed, make investment through not more than 2 layers of investment companies. So they put the restriction presently on 2 layers of investment companies. I think probably the reason would have been that the government would have found it difficult in cases of fraud to really detect the diversion of funds. Obviously, restricting the number of investment companies brings in more transparency, and the diversion of funds can be tracked. Though they have not put that restriction, fortunately, on the companies over. So if you acquire a company overseas, that can have more than 2 levels of investment companies, and I think that's important for globalization, for restructuring, to make them competitive. So fortunately, that restriction is not there.
Right.
And one more, in the subsidiary company, the previous definition was paid up capital. Now they have included the share capital in the identification of subsidiary company. So share capital means equity and preference. So many companies which were not coming into that category, because suppose they have 100 crore preference shares, 10 crore equity. So now this will be 110 crore share capital. So it will be identified as to calculate which company is a subsidiary. There's one major change in this.
Right. Shall we move to the concept of registered valuer? That's again a new sort of provision. What is this concept? What does the Act do to deal with this concept?
Section 247 prescribes the definition of the process of registered valuer. Now what was happening in India, the biggest loophole, if you are asking me, that there is no specific process to do the valuation. You can do the same valuation, say of the level of 1000 crore, I can do the valuation of 200 crore of the same business. So now what they are planning, they want to institutionalize this process. First they are saying, I think the law prescribes that they will make some institution where everybody who is a registered valuer, he has to qualify either some test or certain things they will prescribe. That person can do the valuation. That is one point. So the institution that may come where everybody has to qualify, then he can be.
In what circumstances would a registered valuer come into play?
No, because today they are prescribing so many things like mergers, the restructuring. You have to do valuation. You are doing in-kind transactions. In-kind transaction is not restricted, but it should be valued. Then minority
sale of an undertaking.
Undertaking, yes, sale of undertaking. Minority shareholders. You are buying some shares from the minority, which they are prescribing. If 90%, more than 90% people are ready and 10% they want to give, then what should be the value? So all these things they require that some credibility should be there, and then they are putting a penalty also in this. So today that was in a general clause. Now registered valuer should be from the specific thing. Even merchant banker, like we are a merchant banker, but now we cannot do with this new provision. We have to appoint people, those who are company secretary, chartered accountant or cost accountant, but they should also qualify from this category. So what qualification they will prescribe, that I think
it is left to the rules. At some point.
Yeah.
So before we wind up, is there any other area that either of you would like to highlight as a novel area and talk about?
Yes, Dormant Company.
Okay.
Because in India there are 13 lakh companies, 13.
Right.
And so many companies, like take example real estate. You go to one real estate company, they have thousands of companies. And what? Because we have a land ceiling act, so they are buying one plot in one company, then again one plot in one company. And in India, so many people are buying to save the stamp duty. They are forming a company and purchasing the property in that. Now they have purchased. Now after purchasing, there is no activity in this. I have a IPR which I want to keep in that company, hold like brand process. I have some name of the company which I want to keep it for future project. So all these 3 types of things which we are doing, but we have to comply entire thing. So now they are prescribing that if you have this type of company and you have formed for this purpose, and last 2 years you have not done any activity, you have not filed papers, you are not, there is no financial transaction, then you can submit paper to the ROC and declare yourself as a dormant company. And the dormant company, the compliance is less than the smaller company also. So that way you have this process, and I think so many new company internationally, they will come because they have to protect their brand. So today they are not forming a company because there is a process. Now they can form a company, register their brand or in the name of their registered brand, and then they can keep that company as a dormant company.
Right. Would there also be a stigma attached saying the company is dormant? And
I don't think.
it does nothing.
Dormant company doesn't say it's a negative connotation.
No negative connotation.
Because the law prescribe both, where ROC can make a dormant company, where you can voluntary. So
Say
something which
dormant.
is voluntary, yes.
Right.
Also, it's a process, for example, if you have to merge or liquidate a company, sometimes it's a difficult process. So I think there are lots of companies, especially in big groups,
Right.
which are not really active. So for them, the compliance level really goes down, for these companies. So
you would think there would be a cost benefit out of this?
Yes,
in
definitely.
fact, the transaction costs
resources,
could
both
come
in
down.
terms of time and money.
And the most important thing, how you are managing 13 lakh companies, you are not able to manage.
Right.
So by this
Even
process,
for the registrar.
a small company out, dormant company out, so they have a qualitative company,
focus
so
on-
they can focus.
Right. Any other area you want to touch upon?
No, I mean, otherwise, of course, there are, I think the whole focus of this act is on governance and, all these new provisions that have been come in terms of disclosures, transparency, with more shareholders democracy, the concept of independent directors. I think puts a lot of onus on independent directors to really act responsibly, and hopefully, they will, because you have the new code of conduct for independent directors. Now they can seek information, it's there in the code. They can seek information. There are separate meetings of independent directors that are to be held. There's a performance evaluation of directors. So while all this was there in other jurisdictions, now come to India.
Right.
So I think
And
all
codified.
and codified.
Right.
So I think the codification part is important, and the whole so obviously it'll bring a complete ambience of good governance, hopefully.
Right.
One point which is very important, which has not covered, the foreign company. Now what they are saying, foreign company, any company which has a business in India, it has to be registered. That is okay, that was earlier also. But now they are including the e-based company also, like those who are doing the e-commerce based business. So if any company which has a place in India or doing business in India through e-process also, that should be registered in India. Not registered, but as a company, but they, like a foreign company has to a different like in Delhi.
Right.
All the foreign company has to registered here.
I think we'll need an episode for the implications of that.
That's a very big,
because that throws up a whole new set of dimensions. But that's all we have time.
And I think just lastly, I think the stringent penalties part is very important. So that's again something new that has come in, is the stringent penalties, because I think that will act as a big deterrent.
Yes, we do have a full episode on the penal provisions and how stringent that's become.
And finally, hopefully, the implementation of the law and monitoring is the important part, which should happen while we have the best laws.
Thank you very much for a lively debate. That's all we have time for on this episode on Novelties in the Companies Act 2013. The idea of this video is to just point you to these provisions and hopefully nudge you to pick these up and review them and read them yourselves. Thank you very much for being with us. Thanks.